Welcome back to Trading 360. I'm Caroline Woods. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts, and here to take us through the trades is Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Great to have you both here. Alan, we'll start with you. Let's start with that first trade, Tencent Music, surging higher today, up about 12% in early trading. Why'd you pick this stock?
Well, today's theme is bullish divergence. I'm always asked, how do I know when to buy a low? And so what I look for is the implied volatility divergence, meaning the stock makes new lows, but the implied volatility does not make new highs. So the short sellers are running out of strength. So this stock, let's just talk about China in general. China's 25% off its low. If you look at the FXIs, their ETF, in just a few sessions. It's still down 25% in the last year. So we have a lot more upside. If you look at this stock, TME has dropped from 30 down to 3. Now today's got a big boost once again. It's at about 5.25. But again, this is an example of what I'm talking about today, the bullish divergence bottom that we're seeing in a lot of stocks as the macro market comes back. So if I look at the implied volatility last March, it was at 128. On this last low, when it went down to $3 just a few days ago, the implied volatility was around 110. So that tells me that the short sellers run out of strength, and at some point there's going to be some profit taking, and that's going to trigger an upward move. It's going to hit some stops, hit some more upward action. So what I'm looking at here is a January of 2023, yes, almost a year of time, it's 10 months of time, a $3 call, that's the low, and that trading for about $2.50. The expiration break even is about a quarter higher, 25 cents higher, and this stock's been trading between 5 and 10 for 7 months. So a move up here just targets the midpoint of this range is 750. If that happens, then this option will double in value.
Ben, that today's 12% jump in Tencent Music looks like just a tiny little blip on that downward trending chart. Take us through what you're looking at on the chart.
Yeah, good morning, guys. On the intraday, this is what investors have been looking for, a significant move to the upside. And as Alan mentioned, I like the idea of looking at these divergences. Oftentimes they are where opportunity presents itself for us as traders, and it oftentimes does kind of signal when price activity has been a little bit overdone to the upside or the downside. Let's take a look here, though. As you mentioned, you're up about 12% on the day, and this is a stock, though, that's really been getting destroyed. It's trying to recover some this week, but still has a long way to go. Now, I am taking note of a bit of a V bottom that's starting to form off the 292 low. You can see some of the selling that had come into play since the middle of November from $8 in the top left, $9 make that top left corner, bottom right corner type environment. We're talking a trend lower here, but you can see they're trying to reverse that now. We also oftentimes talk about how we want to see areas of value start to form at a higher level in terms of reversing some of that downward trajectory or that trend environment. We talk about taking out key levels that were established on the way down, and well, we are starting to see that a bit come into play. So I can understand why Alan has the stance he does in terms of taking a look at shares, TME, through the lens that he's looking at. And ultimately, as we take a step back from the intraday look, you can see, well, a couple things. First and foremost, how price came under pressure. Well, not only from 32 down into the lows that we saw back in April or so, but we also had that 50-day dip down below the 200-day. So we talk about the death cross. You can see how price activity came off again, reaction to and continued downward, that downward trajectory. But take a look, recently bottoming out in terms of the RSI, so getting a little bit overdone once we maxed out down around that 295 level, and we've been coming off since. We've got the 50-day moving average to contend with still, the 200-day, which is in the purple line, and take a look at the weekly time frame. Really speaks to the magnitude of the selling that we saw since February of 2021. So we're talking basically 14 months going back, 14 months, 13 of those 14 down with just one up. So yes, I mean, I wasn't sure when this thing was going to stop. Investors are hoping that that 295 was the stopping price, and now they can start to regain composure and build on some of that floor bottom that they have there, potentially start to get something going back to the upside here.
Alan, you pretty much already walked us through the trade. Anything else you want to add on Tencent Music before we move on?
Again, it's a $3 call. So instead of buying the shares of the stock and tying up money, you're getting an option which has limited risk, obviously. But the best part is a modest move in the stock. We've been trading roughly between 5 and 10 for 7 months. So like I said, that 750 midpoint is very attractive. And if it rallies above that, then it's going to go to the high of the range to $10. If it goes to 750, the option doubles. If it goes to $10, this option triples. So it's all about math, and it's all about this bullish divergence theme for today.
All right, let's move on to Riot Blockchain, also higher today, goes hand in hand with Bitcoin. Of course, it's a Bitcoin mining company. Alan, why'd you pick this one?
Again, the same kind of thing. You're seeing a bottom base in place. For 2 months, it's traded between 15 and 20. Breakout today targets 25. But this stock had dropped and mostly been between 60 and 20 in the last year. The midpoint of that's 40. So same kind of play here. It's about risk reward. Puts it on the bullish side. I'm looking at a June $16 call. That option trades for about $7, and it's $5 in the money. So that's the strategy to be able to take care of a bounce in this stock. And today we've gotten the breakout I was looking for. And I want to talk about the macro market because I know that's where we have a lot of commonality on this here, Ben. That the bullish divergence theme I'm talking about today actually happened in the S&P here with that last low. When we made those lows here in February, those new relative lows, we did not get new highs in implied volatility. And what's happened since that time? That saw the short covering start. And that's the theme for today in these stocks.
So Ben, are you seeing that bullish divergence in the chart? What are the technicals telling you?
Big time. We've been dialed in on that. We've been talking about it a lot on the futures show. And I'll take it a step further and point out that we saw Bitcoin, which again, you can kind of equate to Riot, not necessarily on a tick for tick basis, but Bitcoin in the month of February did not take out the January lows, and in the month of March is still yet to take out the Feb lows, whereas the NASDAQ, the ES did take out the January lows in February. The NASDAQ in March took out the February lows, so it saw 3 months to the downside of lower lows coming into play, January, February, and March. And then, again, as Alan mentioned, bullish divergence ultimately, and we've seen a rally off that as some of the short covering has come into play. Now, he mentioned also this bottom pattern that's starting to play out here, this base that's coming into place, and this is what the bulls were looking for, because this base is one thing where we lose some of the momentum to the downside, that selling, that high conviction trend environment, and we went sideways. Now, this is, again, the first indication that something has shifted in terms of a change in sentiment. They're breaking out of the upper extreme of this range. I always say, again, I want to see some areas of value similar to what we established on the way down start to establish itself on the way up. I want to take out some key levels to the upside that on the way up that were established on the way down. But this, again, is that first flag flying in terms of, well, if you're bearish this one, you're going to be looking for it to break down and come back into the $20, $18 range. Momentum through 16 and 14 opens up a door for a retest of that 1290 level, and we could continue the momentum lower. But again, if you're bullish this one, this is what you've been looking for a while now, basically going back to that low of 1290. And let's take a step back. Look at the the daily time frames. We move away from the intraday. You could see, well, in terms of Alan's stance, the RSI has a little bit of room to expand to the upside. The price just broke above the 50-day moving average, this blue line. Volume's kind of limited here right now in terms of this move up. That's a bit concerning. But remember, we were talking about the daily or the weekly time frame in terms of the look that we just had a second ago as far as TME. Well, here you can see again, also speaking to some of the magnitude. And, what I notice is after the slide that we saw, this is going back to mid-November. Look at the move lower here where 8 out of 10 weeks were to the downside, so that high conviction move lower. But look here now, a bit more overlapping and rotational over the last few weeks, basically since the, end of January, the last 2 months. And now, again, as Alan mentioned, we're trying to break out to the upside. So this is the first indication that something bullish is happening here after a bit of a double bottom and after signing, triple bottom in many ways around that 1290 level, finding support down there and now trying to get something going to the upside.
All right, so Alan, how do you trade this one?
Well, and the best part is, again, the option that I was looking at is a June option, June 16 call. It's about $5 in the money. It's got 3 months of time, a high delta. It's going to act like the stock substitution strategy. I'm not tying up as much money. The best part is just a modest move to 25, which is the top of this range here after this range breakout, target to move to 25. That option gains 50%. So, again, it's just math. It's about probability. It's about positioning here with the risk reward, obviously, with this significant drop from the top, that there's going to be some short covering, and Ben alluded to that. If we don't get back above 20 here quickly again, the shorts are going to have to cash in, and that's going to feed this market higher once again.
Alan, your final trade is Peloton. It also is 6% higher today, although still trading just a few dollars above its IPO price. So if this plays into your theme, does this mean Peloton is finally bottoming? Maybe there's no more pain in store for poor Peloton?
Well, it's bad enough to buy is what it comes down to. Now, all these trade ideas came last night before the markets open. I didn't expect the markets to have this big push today in these individual stocks, but that's great for examples here. So that stock has dropped from $120 to $20. All right, obviously, Peloton has a brand value. At some point, they have to figure out how to monetize that better than they're doing right now. So the stock has been stuck here between 20 and 40 for 3 months. $30 is the range midpoint. So let's see if it can get above the 30 level. And if it does that, that targets the top of the range, 40. So again, very modest projections. It can go a lot further. What I'm looking at here is a bullish divergence bottom once again. The stock's trading about 27. So, it's the same play today that all of these stocks have suffered so greatly. At some point, these guys have to cash in on their profits, and that'll chase the stock higher. That's what I'm looking for with Peloton.
So Ben, bad enough to buy. What does the chart tell you?
Yeah, I'm not sure if that's a vote of confidence necessarily, but I guess coming from Alan, I bet probably the best we're going to get here. But Peloton, I think, is a perfect example of how when you're talking about stocks and price activity, you have to be, for one, very time frame specific, and for two, as I always am, dialed in on the trend environment and expecting continuation rather than change. So let's begin with, first and foremost, the most granular, because as Alan mentioned, they are trying to actually get something going to the upside here, and we have seen a bit of a move higher after the lows from last week, where we kind of bottomed out around the $20 level, and almost reminiscent and very similar to what we've seen here in terms of the indices, the move higher on the broader base market as well. You can see, again, bottom left corner to top right corner, and the trend higher. But as you take a step back from the intraday look and take a look at the hourly, you can see, well, they've actually been weakening since mid-November. Again, similar pattern in terms of some of the other stocks we looked at. But I did want to point out here, we were just mentioning as far as Riot and Bitcoin compared to the NASDAQ, and how the NASDAQ, those tech shares have come under pressure compared to a couple of the other individual names. The NASDAQ, again, taking out the Feb lows in the month of March, February taking out the Jan lows. Well, here you can see that even in the month of February, we didn't take out the Jan lows, but then again in March, we actually did sort of bottom out here again and start to work our way lower again. So not really much in terms of a lean here as far as momentum to the upside. That 5 minutes encouraging, but the 60 shows that they still have some hurdles to get up above. Take a step back. The daily time frame. They've been trying to get up above the 50-day moving average. Well, this is the second attempt, I should say, since the middle of February, and really they've struggled to get up above that key level. You can see the death cross coming into play here. We're talking about a year ago, and how since then it's been, well, nothing but pressure in terms of, take a look at Peloton. You can see here in the weekly spells it out again, much like the other two, just the magnitude of the selling, and, well, almost looking at since the last year. So we're going back to, again, basically the, spring, we'll call it, of May of 2021. We're going all the way back. It looks to me like up only 6 times we're talking about here on a weekly basis. I mean, again, going back to, okay, we'll call it June of last year. So not quite a year, but I want to point out here that, this is another one of those names that's really come under pressure, to say the least here, possibly overdone. It'll be interesting to see here, but we are starting to see some momentum on the more granular to the upside, and that's the first kind of sign of recovery process. Again, it's going to first appear in the more granular, but as mentioned here, in terms of the 60 and some of the other broader base, sort of bigger picture timeframes, it's got some hurdles still.
Well, analysts have a median price target of $43.50, obviously a longer-term outlook, but $15 upside, not too bad. Alan, talk to us a little bit more about this trade.
All right. So, again, $20 is that low. I'm looking at a July $20 call. I have the right to be long from the lowest level it's been in a long time, obviously. That option's deep in the money, so it's going to act like the stock. It's trading about 9 or so. It's $7 in the money. It has 4 months of time. Again, that's the theme, that I want to buy deep in the money options that are going to act like the stock. Going to take advantage of the greater returns using an in-the-money option. And more importantly than anything else is I've got plenty of time to be right. So like Ben said, we need to see a little bit more conviction. And for me, when it gets above that 30 range midpoint, that will tell me that I'm on the right side of this trade, and then it'll also be very, very profitable. So that's the way I like to take advantage of these stocks. And there's a lot of them now that are starting to make these bottom bases that have a lot of upside potential. And in the big picture, if we look at the S&P, we're back above the midpoint of the drop from the top. So every time in market history that we've done that, we've made new all-time highs. Now, if we have a full V recovery, that targets 5,500 in the S&P, which is nearly 20% above. So there's a lot of upside. And for me, optimism wins.
Optimism, bad enough to buy, love it. Alan Meckman, Chief Market Strategist, BullseyeOption.com, and Ben Lichtenstein, host of Futures here on the TD Ameritrade Network. Thank you both for being here. Really appreciate that optimism.